JBlog, 21st of November 2010. Starting out today with the P/E ratio of the S&P 500, once again at 2188, still quite high. Those fantastic earnings that we have been promised by Wall Street have not appeared, even though earnings are no doubt coming in at their estimates or exceeding their estimates in most cases, but they're not exceeding them by very far, and those estimates are pretty low. So no surprise there. Market is overpriced, continues to be overpriced, but this is not a market that runs on fundamentals. This is a market that runs on liquidity, which is also one of the reasons why gold is doing so well. So going over here to the let's start out with commodities today. Looking at oil, oil had a big run up last week, all the way up to almost 90, and then dropped down again. Part of that is because the Chinese are pulling some liquidity out of the market by increasing the banking reserves, and also suggesting that interest rates might be going up as well in the future. So that is pulling liquidity out of the market, and that's taking some of the speculation off. So oil had gone down from 89 down to almost 80 in a relatively short time period. I mean that's a big move. Um, Going over to natural gas. Natural gas, I'm actively buying natural gas in two different ways. I'm buying futures as well as gas company. Um, this looks very much like an upside down head and shoulders to me, with a capitulation move right here. I know that I've been saying that technicals don't really work that well anymore, simply because too many people use technicals, and as soon as too many people use anything, it stops working. So I'm partially looking at the technicals. I'm also looking at the fact that natural gas is simply hated by just about everyone, and everybody says to avoid it and buy some other stuff. So that's why I'm thinking it's probably cheap, because everybody who would like to sell it has probably sold it at this point, and it's probably underpriced at this point. Also, there is a good chance that this will be a relatively cold winter. Production has been shut down by many companies that are simply not making money, and shale gas seems to be um, a bit of an issue, simply because the fields need to be refractured a lot. It's very intensive, capital intensive, and at the low margins that gas presents right now, there's no money to be made. So lots of production shutting in, cold winter. October, November is kind of the low period for gas, which was right here. February is usually one of the high periods. We can see right here, January, February, the beginning of the year, it was at $6. Now it was down at 3.50. So that's why I'm quite bullish on natural gas at this point. It's just a position I'm scaling into. I like buying things that are cheap. I like selling things that are expensive. Looking at gasoline. Now, gasoline is one of those things that a high gasoline price will take lots of liquidity out of the market as well, because everybody needs to drive, and the more it costs to fill the gas tanks of those big trucks and big SUVs, the less will be left over for spending on other things. Um, so this is wholesale gasoline at this point. Retail, we're starting to talk $3 again, and at that point it starts hurting the population general. Looking at gold, gold had a topside blowout. I thought it would go lower. It might still go lower. We'll see if we get a head and shoulder here. Realistically, when I'm drawing a trend line, this is a pretty long trend line here. This trend line puts fair market gold at about 1250, 1245, somewhere around there is really where it could touch this line again, which it has done quite a few times. There's no real reason. Gold is a bit overpriced at this point. So is silver. Silver is actually probably more overpriced than gold at this point. Um, but then silver has been underpriced historically for a very long time period. So it might just stay up there longer. Mind you, I doubt it. Chances are it will once again come down into the 20s, the low 20s. That would be my guess. Mean reversion does work. Um, the gold silver ratio was in a channel here, and it's still in this channel. So it's still the ratio still goes in the favor of silver at this point over gold. Um, then we have gold in terms of euros, because when gold moves, the price of gold moves, it could be either the US dollar that moves or gold that moves. It's always a play between the two, so it makes sense to look at um, gold in other currencies as well. In the euro, gold is much more fairly priced. It's pretty well on the trend line where it should be, which could very well mean that gold could go higher or the euro could go lower. I think the euro should go lower. It is at this point overpriced. The US dollar is had a bit of a spike here. If it breaks this downtrend line, then we could see further upside. But the one that keeps surprising me is the VIX. It basically prices no risk into this market. Everything will be fine. Nothing can go wrong. And I'm thinking, well, a spike like this is very possible um, in the foreseeable future. So some of the ETFs that are VIX related, I have some long-term options on those. Because I don't think the market is pricing in enough risk at this point. Another thing that I like uh, is the entire uranium sector, and I'll I'm hoping to do a piece on uranium sometime, just strictly on uranium, because it is something I've looked at for a while. But uh, these kinds of charts here, just going to the granddaddy of them all, which is of course Cameco. Trades on the Toronto Stock Exchange. It also trades on the New York Stock Exchange. CCJ, I believe. I own it. I like it. I bought it somewhere down here. Very well. It has almost doubled in that time period. And the reason why it has doubled is simple, because the price of uranium, let me call that up here. Here's a website that shows the spot price of uranium. Now, keep in mind the uranium doesn't really trade on a spot market. It's not like you can just go up to a store and say, I'd like to buy a pound of uranium. Of course, it's a restricted material, but there's a bit of a spot market, and that spot market has basically gone from $40 all the way up to $60 in a heartbeat, and the uranium stocks have definitely reacted to this very strongly. So that's been an interesting move. Um, and as I said, they will go higher. Uranium will go higher because there's a need for it. Uh, Alternative energies don't really exist, except for geothermal, which I can see being a viable alternative energy, but outside of that, uranium is the ticket. Lots of uranium plants have been built, have to be built, still are on the drawing books, and if you build a plant for several $billion, you're not going to just shut it down and say, oh, well, we'll go to solar now. No, you want to have that plant provide you the amount of energy that only uranium nuclear power plants can supply to you. So that's why the price of uranium, and therefore the price of uranium stocks, will continue to go up, probably until about 2012, 2013. So this is a pretty long bull market, I believe, until the market is actually saturated. S&P 500 has well, we saw the big Bernanke QE2 bounce right here, followed by a drop. This is one of those examples of you buy the rumor, you sell the fact. Once QE2 came out, people were first excited, then a little bit disappointed, dropped down. Of course, they couldn't let it drop too far. So there was some buying here again. Now, whether this will hold, whether it will go further, in my mind, this market is technically overbought as well as fundamentally overvalued, but then the market can go on for a lot longer than makes sense. So we'll see what happens there. I do expect a lot more downside. I'm still one of two people in the double dip camp that I'm aware of. Me and David Rosenberg. But I believe that this entire rally has been financed purely by liquidity, $14 trillion dollars of liquidity of debt, which has to be serviced. I did a little calculation the other day, and it actually works out to be, if this is financed at 3%, which is relatively conservative, that amounts to $420 billion in interest payments every year. That's insane. Somebody has to pay for this, and that will take money out of people's pockets. Taxes are going up. Then there's other things. The unemployment, long-term unemployment has not been extended, so there'll be 2 million people that will drop off basically the consumer pool, that will have no money in a couple of weeks from now. Um, and that should have a definitely an impact on spending, Christmas spending, bad timing, suppose. So new taxes, states, the individual states, the federal government, of course, has the advantage of simply creating money out of thin air. The individual states do not have that. Over 30 of those states are basically bankrupt. So they will have to simply let go of workers' pension uh, pension agreements will have to be rewritten because promises have been made that simply cannot be kept. And there is lots of stuff coming down the pipeline. There's still real estate that is going to be in trouble. There's going to be more downside on the real estate. We're definitely not through this quite yet. So I continue to be careful and saying don't take any great risks, don't step out on a ledge, don't buy anything at this point because deals are coming up. And I don't have a problem with deals coming up. I'm thinking if it gets cheaper, it just means I can buy more, and that's a good thing. And eventually this will work its way through. It's not the end of the world. But the longer they fool with it, the worse shape the country will be in, the entire Western world will be in. You cannot spend your way out of debt. It's not possible. It's been tried many times. It never works. How these university professors with all of this knowledge come up with ideas like that is beyond me. I mean, I just scratch my head. But whatever. We traders, we have to figure out how to make money off of the trends as they are. We don't write history. We can just either profit or lose from them. That's all I have for today. All the best next week. It will go further until it will stop and then it'll go down. And that's what I'm expecting, and I continue to position myself for that. And I am patient. So all the best next week, and good luck. Make lots of money. Bye.